Two AI stock research tools have exploded in the finance corner of the internet this year. One turns every stock into a single-letter grade. The other tries to replace your equity research analyst. I put both through the same test, and here's exactly what to check before you trust either one with your money. Before anything else, let's be precise about what this video is and isn't. I'm not going to pretend I've been running these tools for 6 months across a live portfolio. What I did is go deep on exactly what each tool claims to do, how its methodology holds up, and what a smart evaluation process looks like, the same due diligence you should do on any AI research tool before you let it influence a real trade. If you're expecting a screen-recorded walkthrough of me clicking around inside both platforms, that's a follow-up video, not this one. This is the "should you even bother" video that comes before that. That distinction matters more than usual right now, because AI investing tools are having a moment, and a lot of the content about them is either uncritical hype or lazy dismissal. Neither is useful. So here's the actual verdict framework. Zen Ratings takes the letter grade approach. Think of it like a credit score for stocks. It ingests a mix of fundamental data, technical indicators, and sentiment signals, then compresses all of that into a single A through F grade per stock, updated regularly. The pitch is speed. Instead of reading a 10-page analyst report, you get one letter and a ranked list. The strength of this approach is obvious: it's fast, it's scannable, and if the underlying model is well calibrated, an A-grade stock should statistically outperform an F-grade stock over time. That's a testable claim, which is exactly why it deserves scrutiny instead of blind trust. The way to actually evaluate a tool like this isn't to stare at today's grades, it's to ask, does the company publish backtested performance data showing that its top-graded stocks have historically outperformed its bottom-graded stocks? If yes, how far back, and through how many different market conditions? Because a model that only trained on a 5-year bull market can look brilliant right up until the environment changes. If a grading tool doesn't show its historical track record clearly, that's the first red flag, regardless of how confident the letter grade looks. Fiscal.ai takes a different angle entirely. Instead of compressing everything into one grade, it's positioned as an AI research layer over raw company financials, pulling filings, statements, and disclosures, and letting you query or summarize them in plain language. Think less stock rating and more AI analyst assistant that's read every 10K so you don't have to. That's a fundamentally different job than Zen Ratings, and it deserves a different evaluation lens. The question isn't, is the grade accurate? There is no grade. The question is the extraction and summarization actually correct? AI tools that summarize financial documents can produce very confident-sounding numbers that are subtly wrong: a misread line item, a stale filing, a number pulled from the wrong reporting period. The evaluation method here is boring but essential. Pick 2 or 3 numbers the tool generates, and manually verify them against the actual SEC filing. If it's accurate on the numbers you can check, that's a meaningful trust signal. If you find even one clear error, that should downgrade your trust in everything else it outputs, not just that one figure. Here's the actual takeaway, and it applies beyond just these 2 tools. It's how to evaluate any AI stock research product that launches after this video too. First, separate presentation confidence from accuracy. Both of these tools present information with total confidence, a clean grade, a clean summary. That confidence is a UX choice, not a measure of how correct the underlying data is. Don't let clean design substitute for verification. Second, check for a transparent methodology or backtest. Tools that show their work, how the grade is calculated, what data sources feed the summary, are inherently more trustworthy than black box outputs, even if the black box is right more often than not, because you can't audit what you can't see. Third, and this is the one people skip, treat both of these as a research starting point, not a final answer. An AI grade or AI summary should shorten your research process, not replace your judgment on whether to actually put money into something. The moment you're using either tool as the sole reason for a trade, you've outsourced a decision that AI summarization was never built to make for you. If a real test video happens, here's what it would actually take to do it right. running both tools against the same basket of 10 stocks over a fixed window, screen recording the actual outputs, and checking Zen Ratings grades against real subsequent price performance and Fiscal.ai's summaries against the actual filings, side by side, on camera. That's a real production commitment, and it's worth doing properly instead of faking a test with cherry-picked screenshots. If you already use Zen Ratings or Fiscal.ai, reply in the comments with one number or one grade you've actually fact-checked yourself. I want to build the real 10-stock test video using the tickers this audience is already watching, not random picks. And subscribe if you want to see that live test when it's ready. This is the setup video, that one's the proof.